Earlier this month, Cred released its financials for the year that ended in March 2024 at a press conference. Founder Kunal Shah, who was present, looked pretty relaxed. I mean, he's been in the fintech space for more than 16 years now, and in a light moment, he even called himself the uncle of this category. But these days, he's better known as the founder of Cred, the 6-year-old credit card payments platform. And it's only over the last 3 years that Cred, which is currently valued at $6 billion, has begun monetizing. According to the company, it's been able to do this by acquiring high quality users. Shah reiterated that Cred's focus remains steady on India's most creditworthy. It is the top 10 of households who drive 60% of consumption in our country. Shah pointed this out and said that even with UPI, it was the top 30 to 40 million that drove billions of UPI transactions. And out of that target audience, Cred claims to have about 13 million monthly active users. For the financial year that ended in March 2024, Cred saw revenue rise by more than 60% to nearly $300 million, and its losses shrank by around 40% to 70 million. And its monthly transacting users grew by over 30%. So today, we look at what is working out for Cred and what isn't. Welcome to Daybreak, a business podcast from the Ken. I'm your host Nigdha Sharma, and I don't chase the news cycle. Instead, every day of the week, my colleague Rahil Philippos and I will come to you with one business story that is worth understanding and worth your time. Today is Monday, the 21st of October. In a recent edition of her newsletter, Kaching, my colleague Arundhati Ramanathan explained exactly what Cred has going for it. And it is average revenue per user, or ARPU. At $23 or 1900 rupees, Cred's ARPU looks better than even PhonePay's, which has nearly 20 times the users, double the revenue, but only 1/10 of Cred's ARPU. Cred says it has monetized roughly about 1/3 of its monthly active users. And this monetizable base expanded nearly 60% just from a year ago. All this is definitely good news for a company that has been constantly hit with the question, but how does Cred make money? Cred's revenue comes from three top sources: fees earned from banks when credit card holders make their payments on Cred, and from distributing insurance and loans. In fact, distributing loans is an important part of how it makes money. It has distributed credit worth nearly $2 billion currently. For comparison, Paytm, the largest distributor of loans among fintechs in India, accounted for over $6 billion in the year that ended in March 2024. Cred says it does not present the option to take a loan to many of its users. And while a little more than a third of them are qualified to borrow, only about 10% have taken a loan. According to Shah, Cred has taken a deliberately conservative approach when it comes to loans. He even said it himself. We are an unusual fintech company that way, adding that while banks do all the underwriting and come up with the rules, it is Cred that tells the banks to be conservative because it does not want to contribute to an already overheated credit market. And of course, you cannot pick holes with a conservative approach like that, especially with credit. But if Cred's platform has the most credit-worthy and risk-free users, then it should be a lot bigger and a lot more popular with big banks than it is right now. Stay tuned for more on this. At the press conference, Kunal Shah said Cred's focus on prime and super prime customers made him popular with the chief risk officers of banks in India versus the CEOs. He said, and I'm quoting, "We've ultimately been a sourcing partner and would like to make sure that banks do not have any surprises." End quote. Right now, Cred works with lending partners like IDFC First Bank, DBS Bank, and non banks like Credit Saison and Vivriti Capital. Most recently, it also started working with Yes Bank and L&T Finance. All of them disburse loans on Cred's platform, and Cred makes a commission on distribution. And according to Shah, the platform will strike more relationships with other banks in the future, though he did not disclose which ones. He said, "We will see more and more top institutions wanting to work with us, and some of them exclusively wanting to work with us." One reason he cited for this is the company's affluent base. In fact, a source associated with Cred claimed to Arundhati that 60% of all new credit cards issued in India are to existing Cred members. And also, 65 to 70% of Cred members invest in equities, and that 30% of outstanding home loans are also with Cred members. But a banker that Arundhati also spoke to was not as enamored by Cred as you might think. Banks like his are not so keen to partner with Cred just yet. And guess what the reason is? He said, "Why should I give out my loan on Cred and then pay a commission when I can give it directly to my customer?" This is also why big banks are absent from even platforms like Paytm. There is also the question of just how creditworthy Cred users are. A financial executive aware of the matter who works with Cred said that the average salary of a Cred user is 6 to 7 lakhs per year. So, how can they be the creme de la creme? Cred spokesperson says that the company does not track the data of its users. Now, to be sure, low income customers can be creditworthy and high income ones may be bad credit risks. Intent to pay is not dependent on income. But according to the banker, Cred should also be seeing many more of its users qualify for loans if it already has a high creditworthy set of users. After all, even for large private banks, more than 30% of credit card users would be eligible for a personal loan. And these are all kinds of credit card users, not just the top ones that Cred says it has. Cred also gatekeeps its platform and onboards only those with a credit score of over 750. So, the banker said, and I'm quoting, "If we are talking about a base of all high quality users in the platform, then at least half of those users should be able to qualify for a loan." Anyway, something that Arundhati importantly points out is that someone with a credit score of 750 is a good user is also a myth that needs to be busted. Because in India, the credit score assigned by credit bureaus is largely broken. In order to calculate a proper credit score, bureaus would need to give equal weightage to five criteria: repayment history, utilization of credit limit, number of loan enquiries, the mix of secured and unsecured loan one has, and the age or vintage of the credit history. But the bureaus give an inordinate amount of weightage to just repayment behavior. This was explained to us by a financial services executive, which means that credit scores aren't always a measure of good credit worthiness. And Cred will only get some real cred once most of its high quality users can get a loan on the platform.
Daybreak is produced from the newsroom of the Ken, India's first subscriber-focused business news platform. What you're listening to is just a small sample of our subscriber-only offerings. A full subscription unlocks daily long-form feature stories, newsletters, and podcast extras. To subscribe, head to theken.com and click on the red subscribe button on top of the Ken website. Today's episode was hosted by Snigdha Sharma and edited by Rajiv CN.